Good morning. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com.
And I'm John Darcy, Editor-in-Chief, and together we bring you the morning call. So Scott, this market continues to build a tight range. We thought maybe the meat of earnings season that we were seeing start this week could be a catalyst to push us either above or below depending on how the reports went. Yesterday we got two strong reports from Goldman Sachs and JP Morgan. Goldman's was a lot more impressive, and it was able to push to new highs. JP Morgan opened lower and pushed higher. Do you think those types of earnings reports will be enough to push us out of this range, or do you think we'll continue to consolidate?
Well, the market's going to push out when it wants to. That's why you know the different levels. And for traders, the beauty of what you could do is you could focus on specific issues. So people who were trading Goldman Sachs and JP Morgan yesterday had more success than those trying to play a breakout in the spiders or in the S&P or some of the indices. John, everyone, we on our trading floor, everyone wants to, the trader mentality is we want it now, we want it now. And if you remember, I would say a few months ago when we had that first move over the summer, it happened quick and it happened too quick. So the bottom line is, the whole speed and composure of the market's always different. And if you look at the chart here of the S&P or the spiders, you will see that we've been really holding in very well. Unfortunately, you had 2 big days, which is the meat of the move that took place during the course of the past 2 weeks. Since then, though, you've had some time to accumulate a nice portfolio approach. Stocks that are showing relative strength, stocks that are starting to break out, and within this time period, we've followed this 8-day moving average. And from here, we're still holding the 8-day moving average. This 146 in the spiders has been a good spot to cover some shorts, get long. And the question is today, could we finally break above 147.28 with some power to get some extra cash flow to then retest a 148.11? And if we keep getting decent earnings reports and better, if we keep having positive type of action from those earnings reports, I tend to believe that we're going to break above this range. And the question is, can we break above it and hold it? Or, do we break above it, come back below it, and how does it play with it? Yeah,
something I wrote about in the daily recap article yesterday is that over the last few years, the market's sort of gotten used to having these blockbuster headlines every day. The world's ending because of Europe. The U.S. economic recovery is slow, the fiscal cliff, the debt ceiling. And right now, there's sort of an absence of that huge headline that everybody's waiting for something to happen. And it's almost like the market doesn't know what to do with itself. It's waiting for something big. Maybe it's waiting for the next debt ceiling debate or something like that. But I think eventually the lack of huge headlines like that is going to be a good thing. And it's just a matter of resting and waiting for that to happen and waiting for that next wave of inflows into equities to happen.
Well, with that said, Europe was the big problem spot, and then they became out of the news, and then they went to the debt ceiling, and now not even the debt ceiling, the fiscal cliff, and now they're trying to make the debt ceiling some kind of big obsession, and it hasn't caught on yet. So, right now we're still in the third week of January. So third week of January, that starts to come into the limelight, so to speak, in February, and then maybe we'll start obsessing about that. I think we're starting to see some small headlines back about Europe because, now they're starting to really implement austerity. There's a headline about Greece saying, okay, they have a long way to go and they have to play by the rules. I think yesterday there was, Spain real estate market has to drop 50%. So the bears are trying to write some negative stories. They're not as blockbuster negative like they were the last year with the Mayans saying the world was going to end and that people were saying that the European Union was going to dissolve. So, with an absence of headline news, maybe that'll be enough to keep this rally going.
All right, after that little diatribe, we'll go back into earnings season. Bank of America is the next bank to report this morning. Sort of a similar report to JP Morgan in that they beat slightly. It wasn't a blockbuster report like Goldman Sachs. And the stock is opening a little bit lower this morning. What do you think is going to happen with Bank of America today and going forward?
I think it's going to be a little similar to like Wells Fargo and JP, where both of them had good reports, but they weren't headline blockbuster like Goldman. And you look at the move that we've seen in Bank of America, rightly so. We've been talking about this since in August at $8, and then into the January when it broke above. I'll just show you along the chart at $9.95. If you look here on the chart, you'll see this was the first breakout above 8. And then it consolidated for about 3.5 months before breaking out above $9.95. Then you had another tack on buy around $10.50, and then it's been consolidating for about 6-7 sessions right above the 21-day going into the report. So I don't think people were pricing this for perfection. And I don't think the report was a perfection type of report. But all in all, I would say if you're hanging on to, I actually took some stock into earnings, saying I've been holding it this long, I'm going to act like a little bit like an investor, which I normally don't do. So here it is. Now the 21-day moved up to 1147. So until something changes where we get a close below the 21-day, I think you stay with it. And even if we did, close below it, if I go real quickly into my little handbag here and put another moving average in, we'll put the 50-day, because I don't know why that's not in there. Here's a 50-day. We've seen these banks during corrective periods hit their 50-day and also be buyable for their new highs. But I don't think that we're going to get this type of composure yet. I think we stay above this, and the question is, can it be like a JP Morgan where all of a sudden later in the day buyers come back because the sellers couldn't push it down, and I think above this 1181, all of a sudden the highs here come back into play. I just don't know if it's going to be today. It could be in the weeks to come.
So the banks have led us higher, and it'll be interesting to see. We already went over a little bit JP Morgan and Goldman Sachs. When we stepped in here, Citigroup hadn't yet report, but they also report this morning, just something to keep in mind.
And with that, I just want to show a quick chart of things that are on highs. And right here, you go to Goldman Sachs. Goldman Sachs, came out yesterday. It had a headline that was pretty impressive, and look how it closed. All right, look at this. It's been following the 8-day moving average. We've talked about entries and exits. This 121, great entry. Here's a descending channel, and then boom, there's your close. And I just want to show you something on an active day trading standpoint, because a lot of us were looking at this around 11:30 just to show you how you could still make money if you don't take stocks into earnings. I didn't own Goldman Sachs into earnings, but here was your big gap up. Here was your nice consolidation going into lunchtime. So you had a catalyst, you had a big gap up, you had a range tightening, and then once it took out 139.50, a lot of guys in the chat room or some people in the virtual trading floor were looking at it, and then boom, you had a nice move to 141.39. So that goes to show you that even if you don't want to take headline risk into earnings, you can look for an intraday pattern on a 5-minute basis, and here's your entry, and there's your cash flow on top of what's been a really nice swing trade for those that just hold situations.
All right, we'll continue with the theme of earnings season. Last night we also got a very impressive report from eBay, which was near highs, and this morning is opening above that resistance. Do you think that's something that could get the tech sector involved in some leadership in this rally?
A little bit. We saw technology perk up a little, and eBay typically has been doing well with earnings. The question is kind of like Goldman yesterday. I'm like, if Goldman could hold in the first few hours, maybe you get a trade there. So people who aren't in eBay are wondering, can we get a trade? So this is what you look for here. You go to the chart of eBay and you'll see here's your consolidation. So it's opening, I believe, above this 54. So if it could stay above 54, and they don't just sell it, you might get a nice breakout trade right there. You go to your 5-minute chart to see what's trading after hours. It's trading above, that's that 54, is a little bit higher. So I would say as long as it stays above this 54, it's in the game for some kind of gap and go. But if it comes back below 54, that means it's, there's just no trade there. It just was a sell the news. And if you were an investor, congratulations for holding it that long.
Amazon has been best in breed, one we've highlighted with a really nice upper level base that it broke above. It's sort of pulled back a little bit, but it could also get a boost from eBay. What do you think about Amazon right now, Scott?
Amazon's been one of the chosen ones. It's acting best in high beta land, so to speak, with different lands and areas. And this one is something that a lot of people get confused by. They're like, how could this be trading at historic highs with the PE that's so much above an Apple or an IBM or a lot of those guys? But anyway, look at the price action, don't ask questions. It's pretty nice to see, the best year ever was, I think, the headline for eBay. So could show you that Amazon, it is a reason why it's so strong. Here's where it broke this descending channel right there. It continued to, resistance, then, had a bit of a correction, resumed, and now it's holding above the 8-day. So question is, can it continue? You have the high here of 274. Here's your inside range as a trader. If it gets above there, it'll continue in motion, which it's been doing, since early November. You need to know when earnings are for this one, so this way you don't get caught if you're in it and you're not prepared. So once we get closer to earnings, which is not this week, we'll talk about a potential hedging strategy or maybe just an after-hours trading strategy, because that's what we typically do with the high beta techs. We don't take them into earnings. We trade them after earnings using our levels.
All right, now it's Apple time. It's nice to talk about Apple in a positive way. I feel like every morning call for the past few weeks we talked about how Apple is heavy and out of play and unimpressive and just a weight on the market. And yesterday it showed its first signs of life in a while. And the first 2 days this week we got sell-offs of more than 3% in Apple. It was sort of left for dead. Bearishness has sort of reached a climactic level. And then yesterday, with an assist from technician Tom DeMark on Fast Money, the stock showed a little bit of life. It was up over 4%, I believe. What do you see from Apple going forward?
What's interesting is that yesterday, or the night before, everyone was, chatting about DeMarc's call. Oh my goodness, we missed Apple. I wish he wouldn't have done the call and waited till we had that flush and blah, blah, blah. And I was just like, listen, Apple has a lot to prove. You don't want to chase the up open, but if there's a setup there and there's commitment, you'll probably get an entry for cash flow. And then who knows if that's all it is. It has a lot to prove before, changing its composure. And if you look at the chart of Apple, you will see that it's had a hell of a move to the downside. Go to that chart, and this was at the start of it. Here is the Head and Shoulders top. Okay, here's when it broke below the 21-day. Here's when it broke major support, couldn't get back above it. Boom, beeline to the downside. And then you had just a little red dog reversal that wound up being a nice trade, but that's all it was. Into resistance, came back too quickly. Another little 2-day move that people said, can this be different? It wasn't. Then you had this 1-day move again into the new year that opened up the second day, and it was a little faulty, and then that gap got filled. So the question is, here we are. This is 1 day. We took out the prior day high, which was good. We're actually in this gap, which is negating the power of this last gap, which is somewhat constructive. And here's the next resistance. Okay, the gap gets filled right here around 520. You also have the 21-day, which is right here at 521-ish, 522. So if you look at the move lower, every rally to the 21-day has been more of a short, except for this little overthrow, than a long. You had 2 overthrows, one right here, one right here. So the question is, can we take the 21-day back, hold above it, and then break this long-standing downtrend? So at this point, you don't know. I want to show you real quickly the 5-minute chart, actually the 3-minute chart from yesterday, to show you how you could have entered, because a lot of people, which I just want to address, were a little upset that we didn't have the time to talk. Actually, let's go just without the everyone through the what's it called, the trade yesterday, which wound up being a decent trade. This is when it opened up. It's not showing you the actual gap here. Where it went sideways, okay, and then once it held for that 30-minute time frame right here, I know a lot of us, or some of us, got a little long, okay. You saw it. I didn't have it on my virtual trade floor, bought some around 495. If you listen to me on the radio, I was saying if we can get through 497, perhaps we're going to be able to add some in order to get additional cash flow for at least to 498.50, and then maybe 503. And then boom, went right through there, small little flag, and then went to 503, and then right there is when Apple went from green on the virtual trade floor to flat, or right around there. So that is the virtue of being on the virtual trading floor listening to the radio, whereas I had no time to tweet it in that half an hour because I also had 9, 10 other positions and we were doing a lot of other things. So anyway, with that said, this was your cash flow trade, and then it gave you another one as it held higher. And then from here, once it traded above 504, it wound up going to, the high of whatever it was, 509. So, I just like to sometimes in the long form version talk about time frame analysis. And some guys are swing traders, some guys come in flat every day. So with Apple yesterday, at least there were 2 different entries, and there were entries with a plan. And as long as you have entries with a plan, that's fine. And today, we'll see if it could hold day 2, and then we'll see what kind of commitment comes from there.
Yeah, and if you want to review that chart anymore, we posted it on our blog and on Scott's StockTwits account. Red Dog T3 Live is a way to follow him on Twitter and StockTwits. So take a look at that, and you can see the chart. Moving on into tech, Facebook yesterday had its 3rd day of its pullback, sort of surrounding that surprise event that they had. It was a little bit of a disappointment. I don't think the entire rally for Facebook was predicated on that announcement being huge. I think there was more to it. But now we've had a sort of a calculated 3-day pullback in Facebook, nothing too extreme. Scott, what do you think? Do you think this is a game changer for Facebook, or do you think it can pause and resume higher?
I think it pauses and resumes higher, but there are times when it's noisy and times when it's clean. And again, those who have been on the virtual trade floor saw that from about 24-ish, we would have been trading with the tier system around price levels up until, I believe it was Friday, when it was like 3180, where you finally started to lead the virtual trading floor, and that's when we tried to get a cute short. And that's the way you try and handle these moves. You look at the chart here, you'll see, there are times when it's calculated and times when it's not worth your time. Through this little price point, this was a very nice power-packed situation at 24. From there, you finally had a little bit of an outside day that could have gotten you out or got you a lot lighter. Then it became noisy for about 2 weeks, until finally we started talking about 2860, right around here. Boom, went above there, right around here is when they said, they sent the invitation out, or actually it was, I think, right around here. Gave it some extra juice, and then what did they do? They sold the news. And on here, got a little short, and then yesterday I talked about I covered my short, and I don't have any Facebook position. So at this point, it's trying to hold the 8-day. You have a high here. It could continue to pull back to the 21-day. So I would say for the next week or two, let it build a new channel, kind of like what happened here. Do small day trades or do nothing at all. So this way you're not chopped up. So when it does another move, you're there for it. And if you look where it came back to some pretty significant resistance. So it made some sense to sell into it. That's why this was a potential target, not because we did some algo crazy calculations, because look where it failed from. So that's where you have some sellers. It's come back in and it's been controlled. So I do think there's higher prices for Facebook. It's just a matter of how you want to enter and how, what your time frame is about, taking trades.
More recently, we've been focusing on Facebook and the social media space, but LinkedIn has been more of a long-term winner in the social media space after its IPO. The stock has sort of been a little bit out of the news since we've been talking about Facebook so much, but LinkedIn continues to hold up. It's got a nice little upper-level channel that's forming just below highs. Do you think that's something that could come back into play and get going?
Well, this one I'm sort of incubating where I have some long. I was actually long into the Facebook news, and then once they came out with the maybe that they would have job listings also, I quickly got out of my long, got short, and that didn't work. So I said, you know what? The street doesn't care about this. So I'm not going to stay with this trade. So I took a loss, which you're allowed to do. You get losses as a trader, and I went back to long. And if you look at the chart here, it doesn't warrant much more than a tier 1 right here. But if it starts to get through 119.5, 120, that's when I would probably add to it for then some cash flow within the swing to get back to the highs here of 125. I don't know if it's going to need earnings to get in motion or if it's going to try and do it pre-earnings. But overall, too, you look at the weekly chart, you will see that it's still holding in very well. If you look from where it broke out from, it still held it pretty well right around here. It's in the upper area. And you typically get your biggest winners with IPOs that come public in the previous few years because it's the innovation. They have small floats or sometimes small floats, and those are the ones that can give you blockbuster moves like a Visa or a MasterCard and Under Armour, all the ones that were new issues, and that's why we always focus on some of the new issues from the previous years to see if they have the earnings growth, the formula that it takes in order to sustain those big alpha moves.
All right, we're going to move on a little bit and go into the ags, which we haven't talked about for a few days. It's a theme that we really like for 2013 and beyond. The fact that world population growth is increasing and you have less arable land. You need these phosphates and these fertilizers to help grow more crops for the growing affluence that we see in the world population. You've seen Moss is the one that we listed, Mosaic, on your 2013 predictions. It has a nice looking upper level pattern, as does CF. Let's just go into both of those charts, Scott.
This is supposed to be quick hits, so we're going to go in quick. Mosaic, here we go, quick. Still looking good, above the 8-day moving average. Go to the chart, a little bit of a pull-in. As long as this holds 57.64, I do think that this should stay in the game. Looking pretty good above 60, it gets back in motion. CF, which has always been or more of a leader, and you could see by it being close to the old highs here, it got green yesterday where Mosaic couldn't. Above 220, this thing gets back in motion. Here are those prior highs. Monsanto, which we've mentioned many times, has been best in breed. There you go, at highs. So, Monsanto, I would say, is a first-class citizen. CF has been, right behind it, and now Mosaic and POT are trying to play a little catch-up.
All right, let's move on to Caterpillar. I know this is a stock that you've been long the last few days in the virtual trading floor. It's sort of consolidating in an upper level after a strong start to the year. What do you see with Caterpillar?
I'm trying to see if it could actually continue and show some momentum. It had a big gap up with the news, China getting a little bit better, blah, blah, blah. And, from the swing trading course, if you remember, I talked about pro gaps, and pro gaps typically lead to movement in the same direction. So you go to the chart of Caterpillar. Here's your nice pro gap. It let the 8-day catch up. It's right below some resistance here. I'm long some. And if it starts to get above 95.83 today, I'll probably add to it and then sell some as it extends, and then I'm going to try and hold some that I have in the base for what could be a bigger move, because I don't see any really bigger resistance up until about 100, which is where hopefully if you were trading it, you got out of last year, because last year when it broke this 100 area after all these lower highs, high, lower high, lower high, this was your stop. So with that said, Caterpillar is trying to be reborn, I would say, with this gap, and above this level could be a nice trade.
All right, gold. We mentioned it briefly in the Express. has an interesting pattern developing. There's a lot of stuff, people talking about currency wars brewing. What do you see with the chart of gold, Scott?
I see that every time I try and buy it in front of the descending channel, I lose money. So this time I'm hoping I don't lose money. With this being said, I did enter it, I think, early this week, maybe Monday or so. If you look here, the reason being is because you had a gap up, and that gap up kind of held for the first time in a while. It didn't just fail. Here is your small downtrend. So I would say on a trading level here, I am long some, and if it can get above this 163.20-ish, okay, I would most likely add, and then you have a quick cash flow move to maybe 164 where the moving average comes in, and then ultimately this is your real downtrend. But it's funny because the macro gold guys, they look at this and laugh. I think this would be a great trade. The macro guys are like, are you kidding me? Look at the weekly chart here. Not only is it going to break that, it's going to get back up to this real resistance. They don't even consider that resistance. The real resistance comes in over here around 1,800 an ounce, and then you have all-time highs. So I'm like, you know what? Let's take it step by step. First this small intermediate trend line, then more of the intermediate, and then you can go with your macro. So we'll see how it goes, and we'll stay with it if it continues to act well.
All right, let's quickly touch on TBT, which is a theme that we've been watching, as sort of a sign of money flowing into equities and out of bonds. What do you see with TBT, the inverse bond ETF?
I think that it's been choppy, and I know that we caught a decent trade, and then I got stopped out once or twice this week, and then every time I've gotten stopped out, I'll put a low in, and then I traded a reverse that low. So yesterday, I actually held it. It got stronger. I added a little bit towards the close, and now you're getting a little bit of a gap open, which is nice. You look at the chart here. Overall, this too hasn't really had that much traction. It tried getting above the 200-day and really didn't have any power to it. It's come from a lower level of 60, so it is holding a bit higher here. I would love to see it get back above this 65 and hold it. If it gets it back gets back above that, perhaps it gets back in motion here. Let's go to the 3-minute chart to see where it is pre-market. Pre-market, it's up here at 64.90. Okay, so that would be nice to see if it could hold there. So we'll see what happens, and at this point I'm trying to stay long some.
There's a quick one, an energy play, a natural gas play that came on our radar, PXD. It's sort of consolidated nicely after a strong start to the year. A nice little pattern there. What do you see, Scott?
What do I see? I see 115. It gets above 115. You can get some continuation. That looks pretty good. Same thing, I'll throw one other out there, EOG. It also holding higher, looks okay. If this thing can get above this last resistance point, you could see a power, a bit of more motion above 126.13.
All right, well, that's the morning call. Thank you for joining me, Scott, and we'll see you tomorrow morning on the one-man morning call. We'll see you on the virtual trading floor.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.